Good evening, ladies. What if I told you there was an investment opportunity where you could bet on the entire asset class of crypto without having to bet on individual coins, choose which potential coin is going to perform the best, and that had very good potential upside? Well, in today's video, we're going to be going through Coinbase stock, which might be exactly that. So I'm going to give you my price target for Coinbase at the end of the video. I've gone through the entire financials, the income statement, the balance sheet. I've gone through all the potential bullish catalysts for Coinbase, and I've summarized it all for you in today's video. So it should come as no surprise that Coinbase is an extremely cyclical stock. Just like crypto is cyclical, Bitcoin has its 4-year cycles, Coinbase is also going to be cyclical. And the reason I say it's a leveraged bet on crypto is that the way that Coinbase makes money is they take, one of the main ways that they make money, they take a fixed percentage of every transaction that goes through their platform. So there's 3 boosters for this when there's a bull market. Number 1, there's more people trading crypto in a bull market, so volumes are going to increase. Number 2, the prices of crypto are going to be higher, so that percentage is going to equate to a larger amount for Coinbase's revenue. And thirdly, in a bull market, and even at the end of a bull market, when prices shoot up and prices shoot back down, there's extreme volatility. And obviously, volatility means more volume. More volume means more revenue for Coinbase. So crypto volume going through Coinbase is extremely important in being able to value Coinbase stock. So we're going to use revenue as one of the main drivers of Coinbase's valuation in today's video. Now, right now, you probably realize, but we have the lowest volatility we've had probably since 2018. Bitcoin is just it feels like it's been going sideways for God knows how long. It feels exactly like 2019 and early 2020 before Bitcoin kicked off. Everyone knew it was going to go up, or everyone knew something was about to happen, but the price just kept ticking on sideways. Now that's probably going to happen for a while, in my opinion. So Coinbase is probably going through the lowest revenue it's going to experience ever again right now. So the valuation, like most people will value Coinbase based off its revenue. Here's just a breakdown of Coinbase's revenue over the last number of years. You can see it absolutely exploded in 2021 and their earnings absolutely exploded. They almost made 50% profit on their revenue. And then obviously in 2022 they were still spending as much as they were spending in 2021, almost as much. So they made huge losses. And that was obviously a mistake on Coinbase's part to not realize the bull market is going to come to an end at some point. And all these people they hired, they had to fire a lot. They had to fire a lot of them, which we'll get into. But yeah, this is the quarterly revenue and earnings over the last few quarters. And as you can see, the earnings are starting to trend back up, and in an adjusted EBITDA value, they're actually positive already. So that's good to see. They're cash flow positive again. So this is the cash flow statement over the last few years. You can see their negative free cash flow at the bottom in 2022 to the tune of 1.6 billion. But if we're following the 4-year cycle theory, right now we're in 2019, because 2019 plus 4 is 2023. So next year, as you can see, should be 2020, and we should be back in cash flow profitability or free cash flow positive for Coinbase again. Okay, so the last point on their financials, and then we'll move on to some catalysts and some interesting topics in regards to Coinbase. But the last thing, just to mention that their balance sheet is very healthy. They have similar current assets to total debt, so that's perfectly fine. That's nothing to worry about. Their debt is 5 billion, their cash on hand is 5 billion as well. So let's just get started on some potential bullish catalyst for Coinbase. So as we know, probably the biggest thing to happen in crypto in the last few years, which wasn't necessarily a good thing whatsoever, but was a good thing potentially for Coinbase, and that of course was the implosion of FTX. Now Coinbase's biggest competitor is bankrupt, and bankrupt in dramatic fashion, but nevertheless Coinbase is by far and away the leading crypto exchange in America, and Binance have also left the United States as well. Okay, so how are Coinbase going to increase their revenue in the next bull market? Because we want to try and derive a bull market valuation for Coinbase to see what are the type of investment returns we can get on Coinbase stock if we bought it now. One huge new revenue driver for Coinbase is that they actually own a stake in USDC. So they own a stake in the company that owns USDC. They own a considerable stake actually. But if you've been living under a rock and you didn't notice, interest rates have been going to the moon. So what is USDC's business model? It's probably the easiest, most profitable business model in the world. Essentially, you just print money out of thin air. So print 10 billion USDC, and then you can earn interest on it. And currently interest is 5%. So on your $10 billion, you're just making $500 million in interest, risk-free, out of money that you printed out of thin air, because people want the USDC to transact on chain. So you're able to sell them the USDC that you printed out of thin air for real US dollars, and you can buy US treasuries with those real US dollars. So easiest and most probably the best business model in the entire world. Now we do have to mention that USDC, the market cap for USDC has taken quite a significant hit since the bull market ended, but that's no surprise. And also they did have that fiasco with Silvergate Bank, or I can't remember which bank, but they had 10% of their assets in that bank that almost went under. So USDC lost its peg, it went to 91 cent. So that was a bit of a scare for anyone holding USDC, but that's all been sorted now. And as you can see by this chart of the market cap of USDC, it looks like it could potentially be bottoming out. So the higher the market cap goes of USDC, the more money Coinbase will make from US treasuries. The next successful product that Coinbase has introduced is Base Chain, and I've talked about Base Chain extensively and some popular apps that have already been built on Base Chain, such as Friendtech. If you haven't been on Friendtech yet, it's great fun. I encourage you to get into my Friendtech if you want. I think the shares are like $60 or $70, and if you don't like the content in there, I'm just talking, sharing my ideas in real time. You can ask me questions and stuff like that. You can just sell the share on again if you don't like it, but Base has been a success. It's using the Optimism stack, and it's a layer 2 on top of Ethereum. We can see it already has number 9 in the world for TVL, total value locked, ahead of Solana actually, and number 9 as well for daily active users. So, and there's already a popular apps and people building on it already, so that's a really good sign. Now, how do Coinbase make money from Base Chain? Because it's supposedly a decentralized coin. Well, they get money from the sequencer fees, and it also is good marketing for if people use Base. They're like, oh, this is Coinbase's chain. It's good marketing for Coinbase, and it also helps to grow the overall crypto pie. It makes crypto more useful to have good layer 2s built for crypto users. So one of their missions, which I also really like about Coinbase, is that they're really they're not focused too much on competitors. They're really focused on growing cryptocurrency worldwide, the adoption of cryptocurrency and making it more useful to humans. That's really one of their missions. So making Base a popular and good chain is paramount for that. Coinbase on a centralized exchange has 8 million daily active users in the bear market. Now imagine just 5% of those daily active users, which is 400,000 people, started using Base. We can imagine this in the bull market, but Base could easily get daily active users of 400,000. And Arbitrum right now, one of the most popular layer 2s, has 200,000 daily active users. Alright, we've 2 more bullish catalysts to go through for Coinbase, and then we can start coming to a valuation for Coinbase in the next bull market. So the next one we're going to talk about is one of the topics that people can't stop talking about during this bear market. It's one of the potentially biggest bullish catalysts that will ever happen in the world of cryptocurrency, and that of course is a Bitcoin ETF. Now, why would this benefit Coinbase so much, in my opinion, or not even in my opinion, factually? Well, if you look at all of these Bitcoin ETF applications, or a large number of them, who are they marking as the custodian of the Bitcoin assets? And eventually, once there's Ethereum ETFs, who's going to be the custodian of these Ethereum? So there's going to be these huge Bitcoin ETFs being released to the tunes of tens of billions of dollars within probably the next 6 months, but definitely over the next couple of years. These Bitcoin ETFs are going to explode in the next couple of years, in my opinion. And if Coinbase is the primary custodian for all of this Bitcoin, how do Coinbase make money off that? Well, the main way they're going to make money off that is a custodial fee. So what's kind of an average custodial fee, or what's probably going to be the custodial fee? It's probably going to be pretty low, like maximum half of 1%, or more likely like 0.25%. So even if you have $10 billion. So for example, if they were the custodian for BlackRock's ETF, BlackRock's Bitcoin ETF, and that was valued at $10 billion, which I think it will eventually be valued much, much higher than that. But let's just say it's valued at $10 billion. If they're making 25 basis points on that in a custodian fee, that would be $25 million in annual revenue. So when you're comparing to the current revenue of Coinbase, it's not going to absolutely move the needle like totally insanely. But, you know, if it eventually got to $100 billion of a Bitcoin ETF, then you're talking about $250 million of annual revenue. So that would definitely move the needle. But on top of that, there's also going to be transaction fees, which Coinbase will be taking care of. So with a Bitcoin ETF, people are going to buy into the ETF, sell out of the ETF, and BlackRock have to balance that with their actual Bitcoin in custody with Coinbase. So there's going to be transaction fees that BlackRock have to pay Coinbase to be able to balance the Bitcoin in custody with the Bitcoin ETF. And finally, there's probably going to be some management fees and additional services that will probably cost BlackRock, for example, some money to Coinbase as well. So that's extremely bullish for Coinbase as well. The last bullish catalyst I'll talk about, like there's plenty more for Coinbase obviously, but the last one I want to talk about is staking as a service and all these services that Coinbase are offering. So as you can see, this is Coinbase ETH, so CB ETH over time. So people are just depositing their ETH with Coinbase. Coinbase have the most trust with retail investors like myself. If I was to stake with any centralized exchange, I'm probably not going to choose Binance with everything that's going on with Binance at the moment, or is supposedly going on. I'm not going to choose Kraken, or not going to choose BitMEX or something like that. I'm going to choose Coinbase, and I do actually stake a little bit of Solana with Coinbase. But Coinbase are going to be the go-to place to stake your assets. So stake your Ethereum, stake your Solana, stake whatever else, Cardano, I don't know what else you'd want to be staking. But when retail come into crypto hard, they're not going to want to stake on chain. Like you get, if you are watching this video, I'd say you're pretty deep in the weeds of crypto. And if you have a sizable bag of Ethereum or a sizable bag of Solana, I do recommend staking on chain, going through those extra steps, taking that extra security precautions to stake on chain, learning how to do it properly and safely, because the rewards are much better to stake on chain. For example, stake Sol on JitoSol, you get about 7% APY, whereas to stake on Coinbase you get about 4.5% APY. So where's that spread going? That's going straight to Coinbase's pocket. So you can imagine when all the retail come in, they're like, oh, I'm holding all this Solana, I'm holding all this Ethereum, I need to stake it somewhere. I only have $1,000 worth. I don't really care about making $40 as opposed to $70 every year. So I'll just stake it with Coinbase. So Coinbase are actually making a nice margin on this staking service, like 3% on all this Solana and probably a similar amount on all the Ethereum. Here you can see the Coinbase ETH over time. The holders is going up and to the right only, but the total number of Coinbase ETH has kind of flattened out in more recent times. But maybe if Coinbase continue to grow, they can grow this Coinbase ETH over time as well. And obviously Coinbase are going to take a small percentage of the Coinbase ETH staking rewards as well. So Coinbase are coming out with new products all the time. I'm not going to go through them all, but one of the main ones that's coming out is a derivatives exchange. It's already come out, I think, in some countries. But what's a derivatives exchange useful for? It's useful for, like, you know, people who are actually trading and leverage trading. So the likes of Binance, the likes of bybit, these are all offer derivatives where you can use leverage and trade more easily than, you know, just spot trading in Coinbase. Probably no one really does that. So that is opening a huge new market for Coinbase. Now, like I said, Coinbase is focusing on growing the entire crypto pie and not trying to take, like, not too worried about trying to take market share from their competitors. However, we can see that they've been taking market share regardless. This is probably mostly due to the downfall of FTX, but we saw volumes drop by 48%, but Coinbase's volumes have only dropped by 37%. So what happened there was that Coinbase drop less, that means they grew in market share. Coinbase have also made some important changes in the company. So as I mentioned, they kind of overhired in the bull market. So they've actually cut a load of staff. They went from 5,000 and now they have 3,400. So more than a 30% decrease in headcount at Coinbase. So that is very good for profitability. They also have a culture that I like. I remember when Brian Armstrong wrote a public letter to the employees of Coinbase to say, basically, leave your politics at home and let's just focus on the mission of the company and none of like this, woke kind of stuff. He was like, just, that's not allowed at Coinbase. We have a mission to spread cryptocurrency worldwide. It is more important than any of that kind of stuff. So I like that, and it's very focused. It's very good for a business to have a strong leader like that. Alright, so let's start trying to come up with a valuation for Coinbase in the next bull market. So let's start off with this tweet from 0xJPEG, a really highly recommended follow. Doesn't have a huge following yet, but this guy's going to blow up in the next year in my opinion. Nevertheless, he's kind of just outlining some valuations that crypto projects are already at. Now, let's keep in mind that Coinbase's valuation currently has a market cap of $18 billion. But these protocols like Uniswap, $6 billion fully diluted valuation. Lido, $2.5 billion valuation. And Optimism, $10 billion valuation. Coinbase is offering all of these either now or in the future, and it has its main centralized exchange on top of that. So this is what the valuations are in the bear market. So just keep that in the back of your mind as kind of a floor for Coinbase's market cap. Alright, so I think the best way to value Coinbase, like I said, is on its revenue. Because its earnings are so volatile, it's probably not a great idea to do a valuation based on its earnings, because some years they're massively positive, some years they're massively negative, and then in the bear market, when things are going sideways, they might not be earning very much at all. So it's much easier to just use revenue, because revenue is also volatile but much more consistent, so much easier to create a valuation from it. So let's try and get what the average price to sales ratio for Coinbase has been over the last few years. So this is Coinbase's price to sales ratio since it IPO'd, and it IPO'd the very top of the last bull market. So in 2021, Coinbase IPO'd and it pretty much went down only. The stock price went down only since then. So obviously when it IPO'd, it was in peak mania, peak bull market. So the price to sales ratio was way overinflated and way too high. Here it was, when it first IPO'd, it was sitting at over 20 of a price to sales ratio. Now, obviously, that's way too high. But then when we had the massive crash, its price to sales ratio got all the way down to 1.5 in January of 2023 of this year, which is just extraordinarily low. It's obviously way, way underpriced at that valuation. And now it's sitting at about a 6. So I think in a bull market, we could get back to a valuation, a fair price to sales ratio in a bull market when valuations are ticking up a bit higher. I think you could easily get back to a price to sales ratio of 10. So right now it's at 6. I think in a bull market, it will sit at around 10 as a price to sales ratio. But if you want to be conservative, you can stick with the average that's been at over the last few months, which is 6, 5 or 6. So now let's think about what happened in the last 2 bull markets for the Bitcoin price. So the Bitcoin price went from 17k to 69k from 2017 to 2021. So that's about a 3.5x in price for Bitcoin. But what did Coinbase's revenue do in that time? From 2017 to 2021. So Coinbase's revenue actually 12x'd in that time. From 2017 peak to the 2021 peak, the revenue for Coinbase 12x'd, whereas Bitcoin's price only 3x'd. Coinbase's revenue outperformed Bitcoin by 3 times, or actually more than 3 times. But let's just say the revenue growth for Coinbase outperformed the Bitcoin price by 3 times. So let's imagine that could happen again. So let's kind of stay moderately conservative and say Bitcoin's price 2x's from the last bull market. You can make your own decision if you think that's aggressive or conservative. I think that's probably about right, maybe a little bit on the conservative side. So let's imagine Bitcoin's price got to 140k, so a 2x from the last bull market peak to the next bull market peak. And as we just worked out, Coinbase's revenue would 3x the growth in Bitcoin's price increase. So in 2021, Coinbase's revenue peaked at $8 billion. So if we get a 6x, so again, that's a doubling from the Bitcoin price and a 3x outperformance of the Bitcoin price. So that's 2 by 3 equals 6. So a 6x on the $8 billion that they earned in 2021 means in 2025, Coinbase could potentially earn $48 billion. Now, what was the price to sales ratio that we worked out earlier? Might be a fair enough valuation for Coinbase in the next bull market peak. So that's quick maths, an easy enough one. So we have revenue of $48 billion, price to sales ratio of 10. That would give us a market cap for Coinbase in the peak of the next bull run of $480 billion, which is a 27x from today's market cap of $18 billion. So a potential increase of 27 times from the current price. So some of you might be like, oh, what's the point in only 27x? That's shite. It might not even get that high. Some of you might be like, whoa, 27x, that's crazy. The way I like to think about it is that Coinbase is almost as safe as investing in Bitcoin, but has a way higher potential return. You're being able to potentially take as safe a bet as Bitcoin, which could potentially 5x from here, or maybe 6 or 7x at best, but the potential returns are almost triple that. Now you could also use the price to earnings to come up with a valuation metric for Coinbase, and you saw the kind of earnings they were earning in the last bull run, and I think they'll be a lot more clever and a lot more safer with how they're spending money in the next bull run by not over hiring and not overspending. So the profits in the next bull run, I think, are going to absolutely explode. The co-founder of Coinbase has also been buying Coinbase stock hand over fist, which is a good sign as well. Fred Ursham. Now there's obviously going to be some risks with Coinbase. I'm not going to say it's as safe as investing in Bitcoin, because maybe a competitor comes in and takes their lunch, or regulation really hamstrings Coinbase. That's another huge risk. But in my eyes, I think these risks aren't too crazy. I think FTX ate a bit of Coinbase's lunch, but because they were using customer funds to advertise FTX and get all these sponsorship deals, and they were doing a lot of shady stuff. And Coinbase has always been like to the letter of the law. I've never broken the law. I've always done things the right way. They're going slow and steady, which is really good. It's much more safe than investing in some random other crypto exchange, in my eyes. That's how I'm thinking of Coinbase stock for the next bull run. Like, not one of these like tiny market cap coins that could go 50 or 100x, but potential returns of 20 to 30x in the next bull run. So high potential returns, but not a huge amount of risk when you're looking at all the different crypto assets out there. So I really hope you enjoyed this research. Thank you so much for watching, and see you in the next one. Cheers.